Let's bring in Seth Carpenter now. He's global chief economist at Morgan Stanley, but you used to be in government or something, didn't you, Seth? Can you remind me?
Yeah, only for about 2 decades there.
Yeah, exactly. Uncertainty bothers you and makes you wonder about the near-term future, I think, of what has been a pretty solid economy going back quarters and quarters. Was there anything you saw in this number today that you would tie to that?
Maybe, but I think this is the sort of print that markets tend to hate, that economists love, and that makes markets hate economists, because you have to think about it in a broader context. I thought a lot of how Steve Leisman characterized things was right. There's some payback now for last month's weakness, but last month's weakness was partly a payback from Q4 strength. Look, we ended the year with the economy in solid shape, with the consumer in really good shape, but we've been saying for a long time things are going to slow down this year. I think the market got over its skis by over-indexing to the January print. I think the relief people are feeling now makes some sense, but I think people should be too cautious not to overdo it. This is just a lot of noise month to month in an overall view where we're just going to be slower this year than we were last year.
What does that mean for Fed policy? Are you ratcheting up or ratcheting down the number of rate cuts that you're? And I thought it was interesting. You said we've been expecting this for a while, so not because of tariffs.
Oh yeah, no. I mean, I think once you got through the election, you saw the election outcome. I think it was clear tariffs were going to be there. I think the market spent a lot of time on tariffs, thinking about the inflationary effect, and there's some there. Probably not the sort of completely a story that goes on forever. I think what the market underappreciates is the hit to growth from tariffs, and now people are starting to worry more about that combined with the uncertainty. But then, immigration restriction, there are lots of reasons why the administration is pushing that, but the arithmetic is clear. The reason we had really strong growth in 2023, really strong growth in 2024, all the while inflation coming down, was because we had this big addition to the labor force, and now we're sort of putting the brakes on that and maybe putting it in reverse. And I think the new news this year, right, is Elon Musk, Doge, they're serious about what they're doing. They're getting after it, and they're suspending as many payments as they can. The layoffs that are getting reported, who knows if they stick? There's a legal component to it, but the cuts to hiring, the firings, all of that is just contractionary fiscal policy for this year. So the shift, I think, is pretty clear.
But Seth, so you're at Treasury, you were at the Fed. You heard the Treasury Secretary over the weekend talking about that we're addicted and that it's unsustainable at $37 trillion or whatever it is, and that we need to detox. Do you agree with that, or at least partially agree with that?
So the language and the metaphors always leave me a little bit uncomfortable, because I don't quite know what addiction means in the context of an economy. But look, the deficit is large.
Cheap money, government spending. I mean, a lot of people think that's why the economy that you described is so resilient and vibrant. I mean, if you're constantly figuring out another way to spend a couple of $1 trillion over what you take in, that might be why the economy was doing so well, and that's unsustainable. I think that's what it means by detox.
Yeah, so I mean, I think it's clear. Large deficit when the economy is doing well, that's not a sustainable path. But in terms of cheap money, remember the Fed hiked interest rates, and 2 years ago or so, even you and I had the conversation: would there be a hard landing or a soft landing with the Fed hiking interest rates this much? I will say, just for the record, and remind people, Morgan Stanley was always in the no recession camp. But yeah, so I think the deficit being as high as it was is clearly unsustainable. Now the question becomes, what happens next with the deficit and with fiscal? I think for this year, we've got a bit of a contractionary impulse. But if you look at the reconciliation bill, there's not a lot there that's taking seriously the idea to rein things in, right? The talk of rescoring things so that you use current policy instead of current law shows you, I think, why we at least don't believe there's going to be a huge move in terms of orderly, legislatively driven appropriations process that's going to get you a lot of fiscal restraint.